Hi, everyone. I'm Mike Fairborn. It's good to be here with you today. Folks, Advanced Option Strategies. I'm sitting in for Brent Moores. It's nice to be here with you. I did have a nice little conversation with Brent, who did give me a rundown on what he wanted to look at or what he could have me cover today, which was really kind of reviewing and going into some more of the in-depth details of the Analyze tab. So I'll look forward to going through that with you. I'll show you, some of the ways that I definitely use the tab myself. I think there are some pretty cool things, cool techniques you can use in there, risk profiles, etc., things along these lines. And so we'll go ahead and take a look at that today. I look forward to going through that with you all. And I'm actually going to set up some trades as well that might be of interest to some traders out there in the market as we, do go through the Analyze tab as well. So open to that and any comments that you might have, folks. I'm joined in the chat by a great friend of mine, colleague Connie Hill. It's great to have Connie on board. She's wishing everybody a happy Friday, folks, and I will double up on that. Happy Friday to all of you, folks. We're almost there. We've got one more class after this, and I'm teaching that class as well. We're a little bit short today, but I've got some content for the market movers afterwards. But before we get there, we'd like to welcome Sia. How you doing? We've got Sharon. Great to have you here, Sharon, as well as Will. And to chill. That's right. That's Connie Hill, C. Hill. We've got Jim, Mighty Mouse, Tucson. We've got Riceberg. Great to have you, Riceberg, as well as Austin and others, folks. Love to see any questions, comments you have. We'll take a look at those today because this is really kind of a review session. So if you have questions or things I can address, we'll certainly take it from there and go into it. But so having said that, let's dive into some disclosures to get rolling on that. Options do carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. People Money software application is provided for educational purposes only. Now, investing does involve risk, including the loss of principal. Past performance of any security strategies not guarantee future results or success. Key point here, because we will be looking at those today, short options can be assigned at any time up to expiration, regardless of the in-the-money amount, ITM amount. An ITM option has a higher risk of being assigned early. There's no guarantee that the execution of a stop order will be at or near the stop price. Some additional information there on stop order. Shoot, I'll just read it. With a stop limit order, you risk missing the market altogether. In a fast-moving market, it might be impossible to execute an order at the stop limit price or better, so you might not have the protection that you sought. Okay, well, final point, specific securities used to demonstrate analysis and trading functionality were selected randomly. All right, with that, let's get sharing, folks. Let's take a look at our screen here. Oh, it might be just a standard screen that I share quite a bit. By the way, folks, my charts that I use in my other classes pretty much have, RSI money flow a lot of times, or just the RSI, whatever the case is. It's on that black background, and I'm normally looking at a 1-year daily chart. Now, having said all that, we're going to switch right off the chart. We're going to jump right into, I could say, the Analyze tab right here. But before I get into the Analyze tab, I want to show you how you can also actually start off into the Analyze tab very, very quickly from the Trade tab, and that's through adding simulated trades. Now, we could start off here if we wanted to, but how often do you guys, start off generally more in the Trade tab? Start off in the Trade tab. It's a little bit easier. I think in a lot of cases, whether you're placing actual trades or paper money trades, you probably are just here more often than you are in the Add Simulated Trades. It is a sub-tab, and you certainly can use it, but if you start in the Trade tab, let me just show you, for example. We'll take a look at a stock over here, for example, one that's recently broken out higher, possibly due to tariff driver. We don't know for sure how that's going to affect a company like CAT, but CAT has pulled up. It has pulled back down a little bit, kind of sitting right here. I've got a couple more to look at like this. And somebody says, somebody might say, well, I don't know. It might come down a little bit more. It might, go up, go down a little, whatever the case is. Maybe I'm more comfortable in just setting maybe a trade below the 340 level, below a support level. And maybe that would be something like a short put minus P right there, below 340 or near 340, for example. So if that's the case and you were looking at a stock, you can go just start off in the Trade tab. You might want to analyze that trade first before you put the actual trade in. So I'm going to go ahead and just set this up. So say, for example, I'm on the, we'll just click on the ask price here. We'll put this up. In fact, actually, before I do that, that's just a habit. creature of habit there. Let's go down and just look at the option chain right here. We'll be looking at an option trade. I'm going to click on the July monthly, 35 days left to expiration. Coming down here and looking at that July contract here, we were looking at the 340 level, and we said, hey, maybe I'm looking at selling a 340, whatever the case might be, maybe a short put vertical, because we didn't anticipate maybe prices just breaking higher, but maybe holding in a range. So what if we just sold the 340? I'm just going to click on it right here. And then I'm going to hold the control button down and set up the 330 on the buy. So on the ask right there, we're getting about $1.75 credit, which is not a ton. Actually, it doesn't have a high implied volatility here, but somebody maybe just selling the put, that's a function too. I just thought I would do a spread here to show you. The delta is at a 0.23 on the sell side, so it's a rather low delta. A quick note on that delta, since I brought it up, a $1 increase in the price of the underlying. I've drawn my little $1 up here. Next to that underlying, as you can see, if that goes up $1, that will influence the option, put or calls, by the amount of the delta. Now, obviously, the deltas over here are negative. And so we're looking at this and we're saying, yeah, for every dollar increase, it would drop this. But this is also a reference point, an expectation. Some traders will say, hey, there's a 23% expectation that it will go below that level by expectation. So it's not really like a high expectation. In fact, it's rather low. So although you're not collecting a lot here, perhaps the chances of it going against you are also low too, because these are $10 wides. Little side note, want to throw that in just so we're looking at this trade here. Okay, now before we do anything else, before we put this trade in, we can always analyze this trade, especially if we want to get more details about the parabola, some of the additional indications that it might have here for us in the Analyze tab. Now, the easiest way I've found right from the Trade tab, just come down here, right-click. Once you've got that trade built or anything else, and just go right there. And I'm right-clicking. And now, folks, I am left-clicking right there. Okay. By the way, just a quick note. I did notice Connie had noted here survey time. There is a survey in the chat, folks. If you're finding these kinds of discussions helpful, yeah, that survey's just fairly short. I think it's just 2 questions, but love to have any feedback if you're able to do that. You got to click on it during this session. By the way, if you do like today's presentation, if you get value from it, be sure and smash that like button and subscribe. Okay. So we are now, you'll notice because I did that, I clicked, left-clicked Analyze, right-clicked to analyze, opened it up in the Trade tab. We'll do that again. Right-click, Analyze Trade, and then I left-clicked, and it put us right in to this position right here. So we've already built it in the Add Simulated Trades. It's done here for us. It's right down here below. You can check and see. In fact, I'll just pull this off the bottom. We don't need all that extra space. That's fine. There you go. So there you have it. It is set up here, but we want to now move into the risk profile, getting into some more of the capabilities of the platform here. And now this is where what we can do is this is what you're looking at is a visual of the short put vertical, and there's some really cool insights to it. Now, what I'm going to state here first off, let's discuss a couple of the different categories listed up top. Let me just draw some indications up here with my drawing tool. You can see up here, we've got a probability range, and you see that range in there? It's a shaded range over the time frame that we're looking at. So that's generally, it's a 1 standard deviation. As you can see, that's the default, and that can be adjusted. 1 standard, just standard D for short, or you can see right there, right? Looking at statistical metric, you can expand that or contract that if you want. This is the expiration date. Now you can see that what that did is it just put us 1 day past that Friday, which is the actual expiration date. That's the 19th of July. 19th of July, right there. Okay, so we've got that down, a couple of different interesting things to look at. We've got some lines on the chart here too. Sometimes these lines can be a little bit tricky to see. I'm going to use up here in the upper left-hand corner, just kind of highlight that just below cat. And what I'm going to do is click on this. I'm actually going to adjust this. I'm going to fix that Y scale a little bit so we could see a couple of different things. Let's see, if I go like this a little bit and maybe expand this out I'll pull it up a little bit, and then I'm going to move the x-axis over. So maybe we could just see this a little bit better on the screen and see what the heck is going on here. Okay. And we'll just keep doing this a little bit more until you can really get a good visual of what's happening there. That should be okay for what we're seeing. You get a general sense of what we're looking at here. Now, one of the very first things I'll do on this is I want to just see what I'm looking at so that I have a line here at my break even. Where is my break even on this trade? The very first thing I'll do, and then let's go into some details that we have here. So if you come over here, just to the right of Theo price, in that action icon, you click over here, set slices. I'm just going to set these to break even for now. Okay. And what that does is it sets a line in here, and that is the break even at expiration. So if that were to go, I might just crunch this in a little bit so we can get our probability range in here too. So I've put this in place, and you'll notice down here that that is the break-even price. It gives us a price there on this particular trade. Now we know with the short put vertical, if we hold above a certain level, we can be profitable on it. Oh, let me do this too. I'm going to hide all positions. Sorry about that. The key note is I'm sitting here looking at that. I said, okay, even though I've adjusted it, I didn't make it look great. You got to come down. Always do this every single time. Folks, earmark this. Make sure you do this every time. Under positions and simulated trades, go down and hide those positions right here. Now with that, I'm going to go back to my adjusting so we can really see this. It had other positions showing in there, and that's not good. That's not a good thing. So let me go ahead and just adjust this. Let's see. Yeah. Let's make this so we can really see what the heck's going on. I'm just pulling it so you can see that trade in more detail. In fact, I'll even expand it a little bit more. There we go. How about that? Something like that. You guys could probably see that a little bit better. I've got to go back and just adjust these price slices, make sure they're lined up, and there they go. So there's our break even, and this gives us a visual of that short put vertical. As you can see, it just really nicely, it just says this. If I get above what level? There's a 340 right there. If we hold above that level by expiration, you'll notice down here, that blue line, that light blue line, cyan line, is that expiration date. So at expiration, if we are above 340, we flatten out. Okay, this gives us the profitability scale over here. Notice we're above the zero line. These are, we could actually put, this is plus over here. These could actually have a dollar sign next to them, is what I always thought. That'd be kind of easier just to see that the y-axis here is the dollar sign. Of course, you've got time or price down below, but that's the amount that we could be making on this trade. And where do we maximize the trade at expiration? When prices are above 340. So in a sense, it's a really cool way too to try to get a sense of how a particular trade functions. How does this trade work? Well, if you're above this level at 340, that's where you do well. That's where you make money. Now, what's the max loss? 330, and you can see, just like we'd seen initially when we put that order in, well, the max loss is substantially worse in this case, but we said, hey, the expectations might not be too high. The expectations might be that we hold above 340 due to the price action, potentially tariff situation, whatever we're looking at, right? But that right there is the max loss. If it goes below 330, we don't lose any more below that. And that is, I got to put loss in there. Oh, so slow on the pickup. Okay, and then this is the max gain up top, above that 340. Notice, we do not make any more. Max G. Okay, we do not make any more if it goes up a lot higher. In fact, as prices keep climbing, 350, 60, 70, 80, nothing changes. As long as we hold above that 340, we're good. And that's one of the advantages maybe that a lot of traders would look at for the short put vertical, is that if it drops, well, it's a defined risk scenario. Okay, now let's look at this other line over here too. This is the line as of, you'll notice that is today's date right there. That is today's date, 6/13. This is where we're at today on this trade. Okay, right here. That's the break even. And if prices were to move up, let's say to 350 today, we would be doing better, and the higher it goes today, noted by this line, we keep doing better. And I mean better in terms of more profitability over here. So what's the true advantage here? It's time decay. The time decay element is helping this dramatically. In fact, if I come over here and I just start, not there, I'm sorry. If I come over here, hang on. Is it going yet? No, it's not. Oh, I know why. I'm going out further. I should be going lower. Anyways, we can change that date down here. Okay, I tried a few things. Bottom right-hand corner, do you see? I'm gonna get it back to the 17th right here. Sorry. So bottom right-hand corner, we have the little wheel. We click on the wheel, and you'll notice over here we can put a stock price in, a stock price change, and that can adjust here for us, that stock price, and what that looks like over time if in fact the price goes higher. And you can see that adjustment being made. So you can make adjustments to price over here as well. As you can see, I'm going to unlock that so you can see it right there at 357. That's just where we're trading, right? Be trading right there. Yeah, 357.50 right now. But over time, what happens is this will get closer and closer and closer to break even. They'll kind of merge up as time goes by. Now, another cool thing you have is we've got right here, just highlight this, price slices. The price slices are needed. If I click on the price slices, I come over here. I've got to, let's see, let me push this over here again. Yeah. So we can look at some of the price slices, and basically we can look at different changes over a period of time as well. We can set these to charts. There are a couple of cool things that we can set up here. I set those up to break even right now. You can see that I've got a minus 10. Notice there was one more thing in that action item I can select under the slices. What happens on a 10% move, a minus 10% move, a drop today, or a 10% move? And these can be adjusted too, but it does give us a sense of what that profitability would be like today. You'll notice over here, like I said, we make a lot with the theta column day to day to day, because even if we were to go up 10% today, which is that price right there, the top line, let's just follow this over. We've got our option Greeks. In fact, I'll just go down a line so you can see. That's what we would make. We don't make a lot. We really make it over time. Well, that is actually a pretty good move. Yeah, I'm sorry. That is a pretty good move relative to the credit on a one contract credit. Okay. It's more severe, obviously, because there's more downside risk on something. There's just more risk potential than there is reward, on the upside, potential reward. And you can see that's the impact there. Okay. All right. Now these numbers could be inverted. They could be changed if we were doing, let's say, for example, a long put vertical or a long call vertical. In other words, there's a debit involved as opposed to a credit. So there can be some variations there, folks, but this is meant to give us a general sense of what kind of moves we have over that time frame. In fact, if I come over here, I'm just going to go back to the set price slices to break even, but you can set these up. It's a really cool tool you can take a look at as we go through this. All right. Now, let's do this. Let's go over here and let's continue. So some interesting things to keep an eye on for sure. I'm going to go into the probability analysis where we have this parabola is what it's referred to as, but it is probability analysis. And let's pick a time in here and let's just explain what this is showing us. Okay, so down here, if I choose this date right here, that is July the 3rd. Okay, our expiration, we know expiration is further out in time on this one, but it's, was it like the 19th or so? But on this date, what this gives us a sense of is the probabilities. So between this range here, so we've got just below 340 and just below 380, you can see that 338 and the 378, that right there, if I can draw a line now, in between those two, what that represents is that probability range. So that covers right there. That is, in fact, that one standard deviation. So, a standard deviation is very, very close to, obviously, 70%. But on July 3rd, 70% of the range should fall. We should be within here on a one standard deviation basis on that date. And you can see how that expands out over a period of time. You can say over a shorter term, like somebody was looking to just use this option for a shorter time frame, like let's say the 27th of July. Well, it's a little bit different. Excuse me, the 27th of June. I'll take this off. You can see that parabola is not nearly as big. In other words, there is, with less time, there's just less expectation for a one standard deviation move, right? Less time for that to occur, and that's the price range. It's expected just using probability analysis. So it's really cool to be able to have this here right at your fingertips. Okay? But that is a great way to use this, and it's going to vary quite a bit based upon different stocks. You can see one key variable, folks, would be right here. One thing we want to look at too, their volatility. But one thing I wanted to mention is that when you have the higher volatility, I'm just going to shoot back to the trade tab so we could see this. Look at what our theta is over here at the 340 every single day, 7 days a week as it stands right now. I mean, you can see this. We're set to lose about 25 cents a day. That would be, Saturday, Sunday. It would be, Juneteenth. Next week, it's a holiday. It still has, I'm sorry, it was right here, not 25 cents. I'm in the wrong column. My apologies. Right there. Theta. I did say theta. That's of course correct. Delta is our first column, but it's 13 cents a day. And we have that long right there if we were to put this trade on at a dime a day, right? Max gain is at expiration, right, when we're above the 340, and we saw that already. But there you can see. But that's still, regardless, that theta decay is 7 days a week, including holidays, whatever the case might be. Or we could, somebody that is on the short side would be bringing in that income. And that can really add up over the delta. I mean, let's look at it this way. The delta right here is 25. So if we just stay generally flat for 2 days, what is the theta right now where it's at, as you can see? 13 cents a day, about 26 cents, right? That's the delta impact to erode that option. There are negative signs right there, just like there are on the call side. But this is just kind of a good kind of a comparison to look at. Over 2 days, it's like the stock in this case going up $1. It's not exactly the same, but it just kind of gives you a general sense. So say, for example, what do we have? We've got 2 days. We've got Saturday. We've got Sunday. The markets are closed. There is a holiday next week where the markets are closed. It's not to say that prices can't move sharply after a day or before that time frame or after the weekend, but I'm just saying that it's slightly higher, a penny higher, really, in some sense, the stock going up $1. We get that similar erosion when the market's actually closed. I mean, that's one way to look at it. Of course, there are variations in price that can happen anytime, but it's interesting. I like sometimes to make those comparables. I mean, what delta are we selling at in this case? What does the theta look like relative to it? Because as we came back over here, that actually had a fairly big impact on the pricing over time. Even though we had a big, let's say a 10% move on the stock, which is a big move, day to day to day, it can just eat away at that option. As long as we stay above the price, we're at 357, like right there where our little tag is, you can see that we could go all the way down here by expiration and still make a max gain. Okay. So, okay, I think Connie has got us all set up here. She's answering some questions. Awesome. Thank you, Connie. All right, let's move on. Now, there is this economic data tab. It is in the Analyze tab, and Brent wanted me to hit this specifically, but I'm going to just keep it tied to options. This is where you will find economic data, some really great information in here, CPI, PPI, economic numbers that have come out. Okay, so with that too, of course, fundamentals and earnings. Now, we don't want to forget ThinkBack, which is such a great tool. In fact, before I even go into ThinkBack, let's do one more trade over here, and let's just set this up. as we look at it. Okay, so notice too, if we go into the trade tab, before I do that, here is Meta. Maybe a small flag on Meta. The trend has been up. What do you think the implied volatility looks like relative to Caterpillar? It's going to be a little bit higher, generally speaking. It's in the 30 range, right over here too. Right, so we're just looking at that same July contract. I think this is a trade that I did a while back in one of my classes, just a paper money trade. But you can see that one right there is kind of a short put vertical too. That's one. Let's go ahead and just set one up just for the heck of it and just quickly go through that process again. So let's just say we're looking at a delta that's maybe between 20 and 40, since we already explained what delta is. People are looking at expectations like they're just like a 20% expectation that it won't go below a particular level, for example. There is that 640. Let's see, where are we here? Let's say, yeah, I mean, into this last range. That's an interesting one. So we're 640. So these are a little bit lower. Let's just do a short put in this case, not a short put vertical. So it's about 850, a 15-cent spread here. You've got open interest at about 2,900. So it's got a fair amount in the thousands, clearly, for open interest. The stock is at 1 million plus shares traded today. Let's go ahead and just click on the bid price because we think maybe the stock's going to be strong and hold above that 640 by expiration. But what does just that look like alone? Just a short put only. I click on the bid. I come down here. I right click, analyze trade. It's going to put it right in there for me. Oh, I'm in the think back though. So let's go over here. Here is that trade. And I'm going to move over into the risk profile because I'm going to hide all positions. And here's the position. Now, can you see it? It's going to be really tricky. We did make some adjustments to this chart. So you want to go back and just go to your float Y scale right there. Okay. Let's pull it up right now and let's just see what it's showing us. It looks like there could be some risk. Now that I've adjusted it, I can do this now and just pull it back. And I'm going to tighten this up so we can get a lot of price data and just see what's going on. Wow. Okay, now I'm actually going to go back and let it undo. There we go. So now you get a sense of, oh, look at the put. Look at the short put in this case. What's happening? Well, it seems to be really pulling back quite a bit. There's a big decline that's taking place over here, right? As we look at that, you see that a little bit better now? I'm going to go ahead and set these prices to break even so you can see it. There you go. There's your break even. A lot of times just putting that in the middle of the screen can be helpful to just kind of see what's going on. But there you have it. We see where the price of the stock is trading at now. What does it say? Well, it's assuming there's an assignment if we go below that strike price, which is very, very likely, of course. If you're below that strike price by expiration, there should be an assignment that occurs. Generally, I mean, almost always that's the case. But you can see if prices go down, what do? That's a losing trade because of the requirement of owning a stock too. Let's say if there's not even stock ownership, we just have the short put. It can, if prices are dropping, well, so too can the profitability drop. Where do we make our max gain? Where we sold at that 640 by expiration, right there. You can set up price slices and other things. Like I said, it's just a good way to get a visual. Hey, what's happening here? Where's my max gain at? Where's this plateau at? Right there. Oh, what's that number? 640. Well, that's interesting because that's exactly where I sold this 640 at. In other words, if prices hold above there by expiration, that's what the trader's looking at, right? They're looking to get that gain if it can hold above that level, that premium. There could be other ways that they could be using a short put too, like to try to buy stock cheaper with a premium. And that's a possibility, try to get an assignment if the prices dip. But you can see that if it works against us, yeah, it just keeps going and going and going. We can see some of this too if we were to go back into the trade tab and just right click and confirm and send order. What does it tell us there? What's that max loss? We can't go below zero. But that risk profile there that we were just looking at tells us, well, it's assuming we get hit or prices drop during this over this time frame, or there's assignment of stock, it can go all the way down to zero, the price of the stock, right? And that's 63,000. Now, do you think somebody would hold it all the way down to zero? And I mean, what are the chances of the stock going to zero? Maybe they're not that high for Meta going to zero over the time frame we're looking at, or the case might be. Okay, so those are just some considerations, but I want to throw another one in here just so you could see it. We're making this a little bit more interesting. I hope you think so, by looking at maybe possible flag patterns, follow throughs, whatever the case might be. These guys just made a big investment today. I think they bought AI. It wasn't today, it might have been yesterday they announced it, but an AI, real quick, what was it? AI. There it is. Oh, yeah. Anyways, it was about 14 something billion dollars. Evidently, they want to stay near the top of the AI. That just seemed like a big investment. Anyhow, stock's not doing too much, but there's a lot of news out there. Total side note, let's head back and we'll finish off here with our Think Back. And I was always amazed with Think Back because it does provide us some amazing information over long periods of time. I just lined this up for Meta as well. Now, there is a chart down here if we wanted to see it, which is way cool. That can be a great reference point to use as well. I'm going to just kind of minimize the chart, gives a little bit more room to the upside here. But if we wanted to see historically, how does the option react with a particular trade strategy? If we just have the strike price that we want to, we're looking at, we're considering, we can actually go back in time up here. And I'm going to go ahead and just jump into the box and just say, well, I had a similar strategy at the last bull flag, for example. Somebody's saying that. You can kind of see that last bull flag over here on the chart. Let's just say they're looking at this. It was in the May timeframe. I'm just going to use the calendar, hop back to May, and say, yeah, it was about around May 1st. What were the options? Suddenly it populates this over here. We've got our monthly contract left with 15 days. I can set the number of strikes over here. We'll just say 10. I'm going to pull this down, actually. You can see a little bit more. I can actually just shrink the graph, the chart altogether. And what we can do is we can actually visually see, what some of the delta, the Greeks were doing, the option Greeks. I'm going to show you how we can do that right now. So just under this drop down, looks a lot like the trade tab, right? Delta, gamma, theta, vega, you got it. How did this option, what was the price of this option on that day, at the close of that day? What if I wanted to go up a little bit? This is the 2nd of May. See the options chain? Okay, that's a non-trading day. There we go. There's the 5th. The prices went up a certain amount. We can reference that on the chart below or even over here and just say, here's the 2nd of May. It was right over here. How'd we do? Well, 2nd of May, I'm sorry. There's the 5th of May. We had it move up and we went sideways. A little bit of a flag pattern there. What happened over this time frame? And then as we get to, let's say, the 13th, 14th, what did the price action for those options do? Think Back's the best tool in the world for that. It's just so cool that they have all this data. So let's just go ahead and go to the 14th as we watch this. So we're watching. In fact, we could look at if we were selling a put in this case, or even buying a call. I'm just going to look at selling the puts. But if we just ramp this date up, see the numbers change? Okay, so it's dipping. It's dipping. If we were to, let's see, 14 right there. Yeah, see, it's all the way down to $6. So if we would have sold somewhere in that flag range, where was it at? It was much higher. And now, after that move, well, look at the bid here where we'd be buying back at 660. Okay, considering everything that's factored into these prices as it relates to the option Greeks, because it is factoring in, folks, the theta, the time decay day to day as well. So you get to see the option price at different intervals, time intervals, and then also kind of consider that around maybe what you're looking at on the chart. If I was anticipating another flag pattern, how might that have impacted, or how might it impact the future option? It gives us a sense. I mean, there are such things as theoretical pricing in there as well, where that does tap into the other option Greeks as well. But this is just giving you the actual data of what we're seeing with that price move over that time frame. We tied it in to a potential price pattern as we did that. So some great tools on here. I've given you some of the, just sort of the the few tips that I've picked up on as well. Hopefully you guys can tap into those and get use out of them clearly. But that was the plan for today. And Brent had wanted me to share you this. Just some of the basics, really, of the Analyze tab. Although we did go into some other areas that I would say are outside of the basics, and maybe some cool tips for you guys to take a look at. But there is a survey in the chat, as Connie mentioned, folks, and that is what I had for you today. Now, stay tuned if you want to see what the market movers are. We're going to take a look at the market movers up next, top of the hour. We're going to be looking at specifically. Well, we'll look at how some of the companies have responded to earnings. What companies might be setting up better going forward? That's market movers if you haven't attended that class. But just a quick note on that. That is coming up next. I'll be teaching that. We have so many folks out at the workshops right now, so I look forward to it. But I'll finish off with just one last stock just as a visual so you can see it. And maybe consider placing a paper trade on this if you want. This is Mondelez. It's had some pretty good strength in terms of volume. Some of the volume indicators are showing strength. It's breaking just above its range right now. We don't know if it will flag and trend higher here, but hey, you could, if you wanted to, just go to the Analyze tab, go to the Trade tab, set up a trade on this and see how a particular option strategy might look in the Analyze tab, risk profile as well as probability analysis. If not, think back as well. All right, everybody. Well, hey, have a fantastic weekend if we don't see you again. But look forward to future discussions and anticipate Brent being back next week. It's been great being with y'all. Take care.